Hey everybody, it's Michael Martin. Happy Thursday. So today we want to talk about the trader psychology and the emotional intelligence around writing your winners. And I liken this to like when you go away on a trip. Some folks, when they trade, they're in a trade and they start making money and they immediately have to cauterize the win. Why? Because they want to lock it in because then it's a win and no one can take it away from you. And I know what that feels like, because it validates what you're trying to do as a trader. Obviously, more times than not, well, not more times than not, but net of all your efforts, you need to have net income, right? You might not win, but 30-40% of the time. But when your winners are much larger than your losers, you could still make money using mathematics of expectation. So then there's other folks who are like, well, I'm going to be super greedy here, so I'm going to hold the thing. And they ride it all the way up, and then they ride it all the way back down. Why? Well, because they didn't have a clear vision of what it is that they were doing. So I liken it to traveling. The short-term gains can be likened to like a weekend away, maybe a 3-day weekend, right? Where you can go away and you can have fun, and you could trade short-term, a day or two, intraday, 2 or 3 days, and take a win. Then you can go on like a 7 to 14-day vacation. Maybe it's a cruise, maybe it's a trip through several countries in Europe. The idea being that the more time you have away, the more pleasure you're going to have, right? So why would you go on a 14-day cruise and then cut the trip short? That's how I look at people taking profits too soon. And so imagine you were excited to go away somewhere with a loved one, your family, friends, wherever. Maybe it was a girl trip, guy trip, doesn't matter. And you were there and after 2 or 3 days, you had enough fun and you were just like, I'm going to go home now. Now, sometimes there's an event where you're like, all right, I've seen enough. I'm going to go, because if not, I'm going to end up getting arrested. Where, I've been in those situations as well, where you have to have a keen eye for when the trouble's going to show up, and then definitely be the first one out the door. I've been in those situations. Actually, Jared Dillian teases me about that. So I liken that to what we talked about on Tuesday as it relates to having to feel patience. Because when you're in a winning trade and your hair trigger response is to want to take the thing off, why? What is the feeling that you have? Is it fear? I'm going to guess that it's fear that gain, whatever the gain is going to go away. And you have to memorialize it by offsetting that winning trade. If you bought it long, you got to sell it long and go flat, right? But how come you don't feel fear about missing out on a bigger move? Right? That's the illogical part. You're in a trade, you have a 3-to-1 asymmetric setup that you like to follow. Your winning percentage is 50%, and it hits 3R. And without a lot of thought, you methodically take the trade off. Now, obviously, a winning trade's a winning trade. You can't take it away from you. But if it comes from the standpoint of your unwillingness to feel certain feelings, we've talked about this in the past, that you might find yourself in a spot where you're never going to love yourself enough to have a 5R or a 10R win, even for part of your position. So when I look at writing profits, you have to look at two different emotions. What's the emotion of being in the trade and having fear of not taking the win when you know you could, especially when it's close to or at a predetermined offsetting spot like your 3R, right? And then say, okay, I'm in the trade, it's a winning trade. What would happen if I would stay in the trade longer? What would happen if I would have to exercise patience, which means I have to feel whatever feeling I would have to feel when I sit on my hands? Is it full of trepidation? Do I really feel this risk, right? And even if it was just for one trade, who cares? It's one trade over thousands of trades that you're going to make. Because to me, trading is experiential. You have to do it because that's how you learn. And most importantly, that's how you learn to conjugate your feelings, your habits, your paradigm, your emotional constitution with the behavior that you know how to exhibit. Right? That's why it's not about somebody's system, or it's not about, cup and handles, for example. They might be all super popular, but what's best for you? So when I look at writing winners, it's under the chapter of what is it that you want out of your trading. And for me, you might want to consider the following statement as it relates to your winners. If you're in a winning trade, how can you milk the trade for as much net income as you possibly can? Because you're still going to have losers. You see? And here we are probably presuming that you're following some loss limiting methodology in your trading, in that you're very religious and disciplined about taking the losing trades off very, very quickly. And there's a whole bunch of ways to do it. Yes, there's can slim and 7-8% and all this and that. You have the right position sizing, but ultimately it comes down to what emotional needs do you want to have met? So how do you get satiated when you take short-term gains and not let your winners run? How does that serve you? And how do you reconcile that you might be leaving money on the table? The opportunity cost in some cases might be actually higher in dollars and cents than the actual realized gain. Right? So I don't think you could figure this out by looking at a chart. Definitely, no, you can't figure it out by buying somebody else's system. You have to do it. So that's why I said, buy 3 shares, sell 1 share at 3R profit, sell them all at 1R loss, sell 1 share at 3R, sell another one at 4R, and sell the last one at 5R. Right? And if that works out, now you've just created a 4R, on average, a 4R rate of return, which is a 33% increase when you go from 3R to 4R. That's a 33% increase. So think about all that and then see about how what are your feelings when you summarize or delineate what are the possible outcomes that could happen if you don't liquidate all or part of your winning trade at plus 3R, for example. What would it feel like for you if you had to feel that uncertainty of that probabilistic outcome, right? Because that's where you can apply Bayes' theorem, right? What is the probability of event B given the known probability of event A? Well, you would know that 40% of the time you have trades that go to plus 3R. You've been taking those winners at 3R 40% of the time times 3. That's your positive, that's your winning expectation. So how do you feel around these other moving parts? Because you can only do that, in my humble opinion, by actually experiencing it and documenting it, right? And if you're trading futures and you have mini or micro contracts, or you're trading stocks, one micro contract or one mini contract is not going to kill you. I mean, I don't know your financial situation, but you could always find a way to trade something smaller. And if you're trading the gold, look at shares of GLD. If you're trading, a commodity future, you could do an ETF. I always recommend doing something small but with real money, because then you learn a lot about your behavior. And that's really, really important, because I think just like you've kind of come into this model where you have 40 to 50% of winning percentage and you take your winners at 3R, you cut your losers at 1R, that's learned behavior. And guess what? You could learn to cut them at 4R. You could learn to cut them at 5R. So why not stretch your legs a little bit and see what that feels like? Because the feeling of being able to walk around knowing that you have an asymmetric relationship that's 4-to-1 or 5-to-1, to me is observable and learned behavior. You can learn to do that. But in order to get there, you have to be willing to feel the feelings of not offsetting trades at 3R. At least not 100% of them. And again, you can talk about it till you're blue in the face, but you have to go and experience it with real money and real feelings, and then go to school on yourself and be brutally honest. You could say, for ages I've had this irrational fear about taking risk home overnight, and it made no sense. Because if the trends and the movement and the momentum is strong enough, the mistakes or the surprises are going to happen in my favor more times than they're not. Now, Bayes' theorem comes in where you can say, okay, I know that 40% of the time I can realize a 3R gain on my particular style. Then you could also observe what happens to those names the next few days after. What's the probability of it going higher to 4R? Because you can observe that. You can go back and study your own trades that you were in. It's clean data. It's not hypothetical. Those are trades that you were in. You could say, I could at least walk away with 3.5. Well, 3.5 R, that's more than a 10% gain on your other gains, right? So that's 110%, more than 110%, right? 3.3 would be 110%, so 3.5. So now you start to skew your winners higher, all because of your emotional constitution and how you've learned to become comfortable with what had once been very uncomfortable for you. Uncertainty, have to sit on my hands, I have to exhibit patience, right? That's all stuff that you could learn and put to work and actually look at your own, trading ledger. And for the folks who are more established, I know you have a relationship with your risk manager. That's obviously, again, good relationships are about good communication. You can have that discussion and say, hey, what would it be like if I was in this trade and I was up 3R and I peeled off a half to 2/3 of it and I kept the piece on for posterity and I raised my protective stop to, say, +2 or 2.5 R? Would you be okay with that? Can I take that home? Can I take it home over the weekend? And see what they say. And that, is good because then you start to evolve as a human being. And I think you start to get closer to what it is that you want and how it is that you want trading to serve you. If you're going to do the work, as far as I'm concerned, and you have unlimited upside, you might as well consider becoming very, very comfortable with feeling all the feelings in your world that you can get from trading. And that means the act of not participating, which is a powerful tool for speculators, right? Getting a little bit off subject here, but we could talk about that another time. But anyway, folks, I appreciate you being here. These are great concepts because I can remember from my own life, and then it brings, from my own experiences, then I also get to, relive the stuff and bring it into my own consciousness again. Because some of these lessons are things I had to learn a long time ago. And lucky for me, I didn't have to keep relearning them because I didn't leave my wingman, as they say in Top Gun. So I stuck to my knitting, and I realized that it's the discipline of what I do as reflected in my behavior that's going to really predict where I end up. That's the name of the game. More than what it is that you know. It's can you control your behavior? And from that, it all comes down to psychology. And some folks believe that that's, 75, 80% of it. I believe that too. It's about a trading psychology and emotional intelligence. That's the name of the game if you want to do this for 20 plus years. All right. Anyway, please like and subscribe. Check the bell so that you get alerts. And if you have a comment or if you disagree, because I don't have all the answers, I just have my own subjective experience. I'm happy to expand on an answer or debate somebody on a certain point or maybe make something a little bit more clear if I talked over it too quickly, as I sometimes can do. Anyway, folks, thanks for being here. I'll see you tomorrow. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.